Hi everyone, welcome back to BeRich. Happy Sunday. I hope you're well rested and you're recovered from your weekend parties and revelries and you're ready to get at it tomorrow. Tomorrow is another day of investing. The markets are going to open and Indian markets and the Asian markets, of course, would react to what Trump has done with the tariffs with China because it came out late on Friday and we saw what happened with the NASDAQ. So it's going to be some interesting Monday morning to say the least. I'm not trying to make any predictions, but it's going to be interesting. God knows where gold is going to land, where God knows where even the dollar index is going to land. They're all hopeful of index recovery, but I don't see that happening anytime soon, unless suddenly Taco Trump decides to do another taco and suddenly has taken a U-turn Sunday evening and we are back to where we were Friday morning, which is quite possible. This is one of the reasons why Anand keeps saying we as investors and markets require certainty, and there is no certainty in this. So talking about certainty, let us dive back into this whole OpenAI. Because over the weekend, we came about understanding that OpenAI, this year alone, has raised over $1 trillion in its infrastructure projects. Sam Altman saying that it requires support from the whole industry, highlighting the scale and the interdependency of the project. A series of massive unconventional deals, of course, we spoke about. One was the AMD deal, where OpenAI plans to buy enough chips to need 6 gigawatts of power. That's 3 times the size of Hoover Dam's capacity. So just imagine, that's a mind-boggling number of power this 6 gigawatt facility requires. So imagine 3 Hoover Dams. Capital investment per gigawatt is at $50 billion. That includes a clause which OpenAI has 10% equity stake at AMD stock, valued at $36 billion. Then, of course, the week before that, we did the OpenAI NVIDIA deal, where up to $100 billion in equity in 10 installments, each tied to OpenAI ordering 1 gigawatt of NVIDIA chips. Then, let us not forget the Oracle deal, $300 billion 5-year contract to rent a data center capacity. So this is just the deals. Then let's open the can of worm which Anand spoke about and we understood about circular financing and the systematic risk, about financial circularity where there is nothing happening. Example, of course, is the Microsoft 13 billion in OpenAI, Google and Amazon billions in Anthropic, and NVIDIA's funding of AI startups. So then let's talk about Microsoft 13 billion in OpenAI, Google and Amazon's billions in Anthropic, and NVIDIA's funding of AI startups to buy its chips, CoreWeave. This such kind of cross investing, inflates perceived demand, masks real market sustainability, and echoes the dot-com bubbles of the 90s and the 90s telecom collapse which happened in the 1990s. Now, NVIDIA is being dubbed the central bank of AI because it's funding all its customers to sustain its own growth. So it's pretty much like monopoly where NVIDIA has become the banker. There are rising concerns now. Sustainability, the debt, AI demand, is it justified? Contract renegotiation, cancellations, debt financing is increasing. Oracle itself has raised $18 billion via bonds. Elon Musk, ex-AI, is seeking another $12.5 billion in debt. Right? Experts are warning these data centers can't generate the expected cash flow. Losses could spill into the broader financial system, especially into private credit structures. Remember, you borrow, interests have to be paid. For interest to be paid, you must generate revenue. To generate revenue, you need to have a business plan and customers who are paying you money. So there lies the problem. Of course, we can talk about past bubbles and we can talk about interdependency, but everyone seems to be hankering on Sam Altman's vision, and they seem to be saying he's got it right and we're going to get out of this. But there are a couple of blind spots, which is what I wanted to discuss today with Anand on Sunday evening. One, of course, this illusion of infinite demand. So first, Anand, what is this idea of this infinite demand?
Let me ask you the other thing. The other big player in AI is, of course, Google, which is which is billing you for AI. Right? You are already using it to draft emails and all that. Right? It takes notes. You do a Google Meet, it gives you a summary. Those kind of mundane things, it's already started. You pay for it or it's free?
Some of it is free, some of it is, as usual, Google gives it for free in exchange for your data. Some of it is paid.
So
Some
Google-
basic stuff is free. Then you can throw in some added paid stuff on it.
Okay. Does Google have something like ChatGPT where
Yes.
they are selling subscription and making money?
Yes, Google Gemini. And they're famously the Neo Banana, which they launched, and Vivo 3, which they launched, which does videos. You can buy tokens and you can exchange those tokens for creations.
These are all Google.
Yeah, and the Google Labs, if you walk into, they got a whole bunch of new products from text-based video generation and everything. Whatever OpenAI has been tom-tomming about with Sora, Google did it last month itself. Google is ahead of the curve in this.
Now, my question is, why is not Google in this circular financing? And
That's
why
a good
is not
question. They don't seem to be doing too much of this.
Yes, and second thing, except for an investment in Anthropy, which is another AI, which Google can swallow.
Yeah, these investments are much smaller compared to this. What we're talking,
Anthropy is a very small investment.
compared to this rest of this, yeah.
Yeah.
Where
And that's
Sam Altman starting at $1 trillion.
no, Anthropy is cash.
Yeah,
This is not you Google gives something.
no,
Anthropy
not from
buys-
what I've understood. No,
Or for I give you 10 billion, you buy cloud space from me.
I
Is
don't
it that
think so.
kind of
No,
deal?
I think it's cash infusion. Google has invested $3 billion in Anthropic in recent investments, around $1 billion and $170 million in 2025, bolstering AI offering. Total investment Google has totally invested in Anthropic exceeds $3 billion. Investment rational partnership details access hosting as cloud providing computing services for Anthropic. Google provides technology to make AI models Anthropic's cloud possible. So they're providing the hardware and support for Anthropic.
They are basically giving the cloud space.
Yes, yeah, and they've taken 14% stake in Anthropic.
So in exchange for stake, they are giving this.
Yeah,
That is,
they've
they don't,
they've rented out their space to Anthropic in
for
turn
money.
for money and equity.
Yeah, they are not getting any cash.
No, they've taken 14% stake in Anthropic, which is valued at around 3 billion.
They have got a 14% stake in a company
Yeah,
for which they have rented out their Google cloud space.
correct. And that's the same thing Amazon has done.
So Amazon also has rented cloud space
Space to Anthropic.
and collected another 14-15%.
Yeah,
Now, what I'm trying to say is this looks to be more straightforward. I rent you, give me equity. You can't pay for it in cash.
yeah.
You
You're
give
taking,
me.
taking in stock.
Why are not Google and Amazon doing these kind of circular deals? And why is Jeff Bezos talking about AI is real, but there's a bubble?
Yes. That seems to be the growing trend now. Lots of analysts and experts are saying the bubble will explode and it'll be a devastation
No, no, I'm
financially,
worried.
but AI will continue to be there and grow.
So I don't see any news in which Google is involved, in which they are throwing money like this. And I have not seen a partnership between Google and NVIDIA yet. Right? So how is Google managing to do it without NVIDIA?
That's a good question. That's something that worth diving into. They do use NVIDIA chips in Google Cloud for Google Cloud customers and for its own AI development. At the same time, they're also internally working on their own tensor processing units, TPUs. Dual step strategy, they're calling it, reducing dependency on NVIDIA.
So what Google is trying to do is they initially started with NVIDIA chips, which they paid for cash, and trying to build chips which will replace NVIDIA for them. Correct?
Yeah, reducing the dependency on NVIDIA.
And they're not throwing cash
No,
anywhere else. So there are two models that are emerging. One is the Google model and one is the Sam Altman model. Google overall is not losing money. Google is making money, is on positive cash flow and hanging up and being there with Sam Altman. You are saying at times they are ahead of Altman.
the software, what they're providing in terms of the capabilities in AI, some of it is, Sam Altman is behind in terms of the video generation.
So they have gone ahead of Altman in some.
The way it works, yeah, some of it, yeah.
And they're not like barred way behind.
No, this is like a neck-to-neck race right now.
And he is not borrowing $1 trillion to invest.
No, not as far as we know.
Yeah, because it's a public limited company, you will know this.
Yeah,
And even Amazon is not borrowing $1 trillion to invest.
no. They do issue bonds and they do raise, but it's part of their broader strategy.
That is part of their border strategy. So they have not raised money.
They're not doing exactly what, they don't need to do what OpenAI is doing, man.
Why?
Because He's already in the ecosystem. He's already a cash-rich company.
So basically,
And he's got huge assets.
what I'm trying to say, neither Amazon nor Google are spending the kind of money that Sam Altman is spending. And Amazon and Google are profitable.
But that's the same argument Sam Altman is making, saying, once I build it, once I reach that capacity, I'll also be on par with them or even bigger than them.
How will you be on par with them? Because you are spending $1 trillion. These guys are not spending $1 trillion.
Yes.
They already have the ecosystem.
Yeah, that's where the two problems lies. One is the amount of debt these guys are taking on. These debt needs to be paid. Interest needs to be finally be paid,
Who?
right? By whoever, by Amazon, by Elon, by Oracle, by OpenAI, whoever is taking the debt, finally interest has to be paid. End of the day, revenue, that means business model has to be such that it's revenue generation.
But I've still not understood how it will. How will you generate this kind of revenue in AI?
Correct. And the biggest other thing is the whole American infrastructure on energy is very fragile.
But the way it looks like, Amazon will hoover up all the consumer-facing AI business, all the personal
Business facing.
business facing, I don't know, but all the personal Gmail kinds of thing will be wooed up by Google.
Correct.
So only the corporate may be open to you.
Correct.
And Google will make a big push for corporate
Correct.
returns also. So we do not know how the returns are coming. It looks like a circular financing. It is circular financing. We have to wait for the bubble to burst.
There's a huge contagion risk in this.
But did you notice one thing? TCS has announced a huge data center, but the investors are downgrading it.
Correct.
But the same thing, if we had done in America, they would have pushed him up.
Pushed him up, yeah.
So different markets, different tastes.
Correct. Anyway, this is an interesting conversation. See, this is what we're trying to mean. We're all trying to understand what is this all meant to be.
Like in India is so now and negative that TCS saying I'm putting $5 billion and putting 5,000 people in UK on AI is not pushing the envelope.
Correct.
But even the which is real, but whispering
in US
markets is really taking off the stock.
Correct. There is a dissonance in the sense that in the American market, AI seems to be the only thing that's pulling their market up. Because if you remove AI from their market, the S&P 500, the entire market is in terrible shape. They've been outperformed by equal weighted stocks across the world. In Europe, in emerging markets, if you compare non-AI toe-to-toe with American companies, they've been struggling this year thanks to the tariff and the trade war and all that which has been going on. So they're completely reliant on AI. And the flip of it, the rest of the world doesn't seem to be having a much appetite for AI. Other than the US, outside US, anyone's talking about AI and AI investment, they seem to be very cautious and very slow on the uptake.
Anyway, so this is what I wanted to convey to you, that different markets have different tastes. On that note, thank you for supporting BeRich. I hope you like this video. If you enjoyed this video, hit the like button, subscribe to our channel and turn on the bell notification. If you do not turn on the bell notification, you will be not notified every time we put out a video. Once again, thank you for supporting BeRich.